Okay, hi there, guys. How are you, Gene? Yeah, hope we had a good weekend also. Me, it was actually quite nice. We managed to get a couple of good days. Probably yesterday wasn't too bad at all. A bit windy, but at least the sun was out rather than the rain, as anyone from Melbourne would know. G'day, Mel. See you back, mate. You had a week off, did you? With the kids? All fun and games there. All right, welcome, guys. Welcome to Trade Setup and the live stream. It is the 16th of July. So ticking away nicely into the new year, or new financial year anyway. Anyone that's new, you'll see us on Twitter well, on the top left-hand corner, you'll see us at trade_setup. That's our Facebook page on the top right. But most importantly is subscribe to us at YouTube, and it's on the bottom right-hand corner. You'll see the address there is at TradeSetup, capital AU. So join us on there, guys. And also just our general advice warning for anyone that's new. Just take some time just to read through that. Now, today, look, I haven't got too much set out. I think we don't really need to set up too many plans. I can talk pretty easily. So what we'll do is just obviously just see what happened in the US. Not much at all. So there's not a large amount to talk about from the US session to finish off the week on Friday. Just have a look where we're at. I haven't looked at it for a little bit. I'm pretty sure we're down at the moment. So let's just get onto that. And then what we'll do is just get into analysing a few more stocks. So we're down 24, 25 points at the moment, the XJO, the 200. And I've got to adjust that screen. There we go. All right. So Friday night in the US, they were up slightly, but the NASDAQ was, actually, I was quite surprised. It was relatively unchanged. It was only up a few points. You got the Dow sort of led the way. And I think the Dow's sort of making back what they lost on the index compared to the other markets. I think the top 30, when the trade wars and trade concerns and all that little spat was going on, was sort of in play, and the markets were negative. That was the fastest down to lose ground, and I think it's just sort of making it back. So if you take that into account, you look at the bigger S&P, the broader market, didn't put on too much, but it's actually cracking up through some levels. So it'd be interesting to see how it goes tonight and the start of this week, where it can just kick on, or it's going to find a bit of selling resistance there as well, a bit of selling pressure. It might be in sort of that grind high, pops through, puts its head through a bit, has a bit of a pullback, builds a high low and goes again, but just can't get through the highs too convincingly and just work its way up to all-time highs. But we'll see. We'll look at the Dow, look at the Europeans. We're up on Friday as well. So most of the focus on Friday night, because there was really no chatter about the trade war between anything from China or the US. It was relatively quiet on that front, which led probably a few intraday buyers, a few intraday traders to push around the market a bit, play around the market. So the focus is mainly on interest rates again. I think on Friday they had Fed minutes. I think it was released to the Congress saying the economy is in good shape, it's growing, they're happy with the way it's growing, blah, blah, blah. So again, the focus was on sort of interest rate rises, the strength of the economy, and of course that's always going to be dampened by the trade war or the trade concerns, because you never know really. No one knows what Trump's going to say or do next. So that was Friday night. Again, Europe also is focused on growth and earnings out in the US. And I'm not sure how the banks went. There's a couple of banks that released their earnings on Friday in the US. I'm not sure who or what the results are, but it wouldn't have been too bad at all, I would assume. Pretty much in line with expectations. So they are expecting in the US through this earnings season to be stronger, quite strong, because of the tax cuts, the global economy. And then everyone will be from there, just trying to factor in what this trade war is going to do, how's it going to constrain growth, what's going to do the companies to earnings going forward. Now, of course, I think China has come out and said they're happy to go back to the table, the negotiating table, or the US said they are happy to go back and resume negotiations. So that's a good sign. Now, it all comes down to who wants to give up what and what they want to do and what the US ultimately want, and what ultimately the China are willing to give up to come to sort of some negotiation and end the trade war, this trade dispute. So we'll see what happens. And that's probably still going to take some time. I think they've got about maybe 4 weeks. I think it was a month when they were talking about the extra 10% on 200 billion um, until that was implemented. So we've got some time to negotiate, and it'll be back and forward. It'll be the dying minutes if something does come up. You'd expect if they come to an agreement, it'll be in the dying days. Now let's just take a look at the charts. Then let's look at the big S&P. So the S&P, you can see, I'm thinking that up a bit. It's just popping through, so we're right around that 2800 mark, 2801 it finished at. So that was a good day. Was it Thursday night? And we sort of hovered around, put on some minor gains. So it was probably just because we're right up when we are stretched. You can see from oversold to overbought. Took quite a bit of effort to hold that high low at 27, push up to 2800. Doesn't mean it can't spike up, and then you might, maybe like this, we get a bit of a spike up and then retracement to build another high low, which would mean that the market's going to be a bit negative for a bit longer. But this kind of price action is looking more grindy. It could just grind its way up to the highs, or it might start to get on with it a bit. But we'll see how it goes. If it can start spiking up into those highs at 28.75. Either way, I think it's going to be those, higher highs, higher lows, higher highs, just sort of grinding its way back up until something's. And even if the trade war, I mean, this is my thoughts anyway. If the trade war does get resolved, they come to an agreement of some sort. All that sort of stuff's taken, the negativity taken off the table. You still got global growth at all time. Well, the US economic growth at all-time highs. You got to think how much further, because would expect a lot of that's been factored in. If they're not going to grow anymore, is there going to be some people exiting the market? How all that's going to play out? Just booking profits, or it's just going to keep these markets continue to tick higher, take out the all-time highs, and just continue to grind higher. I wouldn't have thought this year would be too positive. I mean, that weekly looks great. I mean, to be honest, you've had that big pullback, so that's that reversion to the mean. You got ahead of itself just below 29, big reversion to the mean, chopping around, cleaning out a few of these late buys, really putting them on the sidelines, all the fear. But really, with all that fear and all that negativity around, it's still holding up quite nicely. And it's that underlying economic growth or the US doing quite well that's supporting this move. So have to see how much further it can go, and you can't just keep going up. I wouldn't assume anyway. The Dow weekly doesn't look quite as nice. I mean, it's still holding, like we said, holding the higher lows. Flick down to the daily. Oh, sorry, on the weekly too, you can see that move down has taken a bit of heat out, and it can turn around and just get back to overbought and push up through 25 up to 26. So there's a lot of room to move on the upside. The daily is getting a bit stretched up around that 25 mark. So it may be that it's struggling to get up to that high. So we'll have to see. I mean, it can easily just hover around here. You can see what it did back in start of 2018, hover around overbought and just keep ticking higher pretty much for a month, just keep the grind up. It can easily do that. But it's just saying, by looking at these stochastics, just saying that it's taken a bit of energy to fall short of the previous high. So what's the market saying to you? Are they still a bit negative? Is that, serious strength in the market? Wouldn't expect so. But never just close out because of that, because you can see this type of thing, you miss out on these massive gains. And that was, just looking at what happened there when it was in overbought territory. So that was around 25,000, ticked up to 26.6. So that's 1,600 points you're potentially leaving on the table if you just get out because of market, because of your indicators, rather than letting the market force you out when it's on the way down. So that's the Dow. FTSE, actually, that FTSE is not looking too bad now. See how we've got the two moves down. We've got a move down from the highs, sort of consolidation, that slow grind up, another quick sort of move down. I mean, the sideways action was about a month. It only took really a few days to get back down to 75, and then we're just punching up. We've got a clear little level at 77, which is just getting attacked. It's just rejecting that a couple of times, but it's holding higher lows into it. So we'll have to see if that can eventually spike through. Then it might come back and build a serious higher low, and then off she goes. Again, it's all dependent on what's going around trade wars, what the concerns are, what they're willing to factor into the market. The DAX, in all honesty, it probably flipped to the weekly, doesn't look quite as positive, but this is more sideways actions to me. It's holding up through 12,000. We took out the highs here, washed out the higher low, popped up, potentially building a lower high, but then it's coming into squeeze and building a higher low. So really, it's you can see it's probably over the longer term coming to a point of agreement where buyers and sellers are matching off. No one's willing to push the market too far to load up on the risk, and anticipation is going to break to new highs. No one's really willing to do that with the overall sentiment, I guess global sentiment just at the moment. But the economy, Europeans not doing too bad. You still got Brexit sort of in the wings, I think. So I don't know what that's going to do. I mean, it's just keep an eye on the charts to see how it all plays out. Now to the AEXJO, you can see that's the weekly. The weekly, just flicking on that, is you can see it's still hovering around overextended. I mean, it doesn't mean it can't just keep grinding higher. On the daily, you can see daily could just oscillate between say 50% and 100%. So mid-range to overbought to mid-range to overbought, and the weekly can go sideways with stochastics, and it can just keep grinding its way higher, holding higher lows in the daily, keep pressing to new highs, pulling back to build a higher low, and keep pressing into new highs. And I'm still expecting longer term from the weekly, we're going to be eventually targeting up to the all-time highs, which from back in '07, around 68, I think it was. What were the highs there? 68.51, say 68.50. When that weekly's still holding trend up, it's getting a bit overcooked maybe up here, so we may be due for a bit of a correction lower. But the daily, if we don't, I mean, this looks like it's going to roll over and take out that 62. It's got a few little minor levels of support to get through, which you could easily do that. Do this, have a decent correction, back to the MA. Let's just draw that back to the mean. I just want to see, out of curiosity, what that's saying there. Right, so that's your daily trend. So it could easily, I'll be interested to see if this trend breaks, then this uptrend breaks. So that's why I'm more expecting it just to bounce around here and hold up above that 61.75, somewhere between that and 62. Just chop, because anyone would be looking at this thinking, oh, it's going to get sold off, but this is sort of more the important line. It could just chop around here, and this is your anchor around 61.75 to this leg up. So you've got this leg up, good correction back to the mean, this leg up, minor little correction here, but it's still all, it's an anchor to the uptrend, and we could just chop around here, go sideways. It doesn't matter really what we're doing, as long as we hold up above that anchor level and sort of hold this trend up. And then that might just extend itself. But the weekly, yeah, so this is the leg up on the weekly from 5,700. Yeah, so it'll be, we just have to keep an eye on that. It's mainly the daily at the moment, just to focus on the daily, whether we chop around here, go sideways for the bit. It could take a bit of time once the US works itself out and trade wars work itself out, because we're obviously fully linked to China. What's going to happen with them? And then potentially hold high low, and up we go. But again, there's a few things that have got to happen first. Now, what else have I got here? The DAX, Nikkei, not much there. Just sort of, that looks like it's rolling over. It looks like it's potentially it's just extending up here to build a lower high. But again, that would play into that being a lower high, but longer term, that trend again is still up. So you can see that overall indices, when they do go up, they're not going up a massive volume I wouldn't expect. And they seem to be well contained, and you're running into lower highs. I mean, there is room to move. Obviously, there's room to make some money, but they seem to be contracting in on themselves. So, when they're contracting when buyers are holding higher lows, but sellers are building lower highs, are pushing it down, it's coming to that point of agreement. It's going to break out sooner or later. They don't just go sideways when they go there. It will break out and it'll probably be hard and fast, but I wouldn't. It's just trying to factor which way. I mean, that's a simple thing. Which way is it going to go? And it's easier to trade that than I guess you think. You just trade when it breaks up. Away you go. You buy it. If it breaks down, maybe take some risk off the table or implement some short positions just to take advantage of that move down. Now that's Nikkei, Hang Seng. Hang Seng looks a bit prettier. I mean, that weekly trend's, we're having a bit of a corrective price action here. You've got that little, it got ahead of itself, obviously. Some heat came out of the market, went sideways, some further that secondary move down. So here, I'll be interested to see if it can hold up here, hold up around that 28 or above and just start building. And it's got to really reset itself, probably chop around a bit, pop up, pull back, but then you want to be looking for that high low to see if the Hang Seng can kick on with it and get on back up through that 33 into new highs. All right, so that's pretty much it, I guess. At the moment, like I said, I'm not seeing hell of a lot. I mean, someone put this up on, it was OFX. I think it might have been Laurent. Laurent, you did that one, didn't you? Oh, through the stream. I actually don't mind that at all. You can see the markets. This is on the weekly. The market's been sort of heading down, and we look like potentially here it's starting to roll back up again on the weekly anyway. You've got this big double top essentially. Well, we'll draw that up. And this is only going off data we've seen on the screen. I haven't bothered to look past that. Oz Forex. Um, big double top through here. See the market's pressed down, started to build, washed out the lows and started to build again and accelerate up, then failed, pretty much failed miserably. You gap down from here. But that's all off a double top there, that price action, big major lower high. Market's just pressing down. But what we're seeing here is at the start to, as opposed to that sell-off, this is coming from low high and it was just getting bought up. It got through the lows. If I just clear that up one little bit there, this price action, it took out the lows there. This moved down, but then it started coming back up again. Tried to go back down, retested those lows, and then you get some buyers starting to take it up to that anchor level and took it through the anchor. Come all the way back down, retesting those lows again. But what we're seeing, so we've got one, two, well, potentially not the first one so much, but 1, 2, 3 tests of that level around that was it 130 mark, $1.30, and then starting to lift. But it's this most recent price action. You can see it on the weekly. It's pushed up and then it's just chopping around, but it's holding, what it's doing is holding highs from this leg up. It's holding the top third. So it looks actually quite nice. So you can see potentially it's spent quite a bit of time since good part of a year and a half holding around those lows, and it might be starting to build and starting to attack the highs. Well, it's starting its journey up. So I mean, the first port of call, you'd be up towards that 240, and then from there, it's really potentially closing the gap and up towards the highs at 350. So if there was a trade in this, which there could be, I mean, in all honesty, that weekly, you can see the stochastic's gone from overbought, sort of that 50% mark, but it's holding. It's really just been going sideways. So when price is going sideways, sellers are trying to give it a go, and you can see that by stochastics, are trying to force it down. And this, as a pressure gauge more than anything else, that's where I read stochastics. Pressure gauge, they're selling it, putting the pressure on, it's not going anywhere. Price is holding up. It means there's some good strength in buyers at that price. They're willing to soak it up. And eventually the sellers give up and they start to lift that price, or that price action anyway. So that's the daily there. It actually doesn't look too bad. It'd be interesting to see if we can pull back from here and build a higher low. I don't take the spread candle as a higher low. I'd rather see a couple of consecutive days and then a couple of consecutive maybe sideways price action days, and then start to head up, and then you're working off a higher low. That's just some good evidence rather than buyers let it test 170 again. They're stepping in a bit early at higher prices and potentially up she goes. Pupil free day. Sorry, I just saw that, Laura. So that was yours, wasn't it, on OFX? I've got that on the radar now. Thank you very much, mate. But I like that one. MNY. There's another one. You can see that longer term trend has just been, especially from $1.20. It's just been grinding its way up. Took out the highs. So it's fairly well established. It's been about a year now, just a touch over a year. That trend has been up, and that's after. And you can see the price action how. Yeah, sorry guys, just chucking some charts, chucking some stocks. Might as well just get the ball rolling nice and early. So there's a few out there. I think before I just got sidetracked, there's a few stocks out there. I think there's another one Laurent was saying, it could be NWO. I'll take a look at that. There's a few out there that, yeah, okay, off the daily, I got a prime setup. It looks nice. You know where your risk is. It's an over to sold. It's holding a higher low, potentially holding a higher low. It's worth the risk. But then a lot of these good setups on the daily, you flick it back to weekly, and they're looking to be overcooked on the weekly. So always in the back of my mind is what if the market does crash? What if the trade war kicks off big time? The markets sell off. They're probably going to get, not, I wouldn't say crucified, but ones that have been well entrenched in a weekly trend, and then all of a sudden you get something out of the sidelines to trigger them off. People who have been involved in that move up and have got profits potentially booked, still to book, they're not going to muck around, and they're going to book them quite quick, and you're going to get those that will just roll over quite quick. Now, if there's nothing that comes out in the sidelines either, no real news, you've got to ask yourself how much of that trend has already played out. What's the potential? So, like I always say, At here, as a higher potential, it's going to move up to well up here. Even though that trend is up, it's going nicely. This is a lower probability trade than something that's just starting its move higher or potentially in this zone. I hope that's making sense. So this is potentially the start of a new leg. You've had it pressing up. You've got this market that's popped up, pulled back, retest the lows, built its way up, washed out the previous highs, pulled back, couldn't get it the second time, had a deeper correction, and then started to hold higher lows. So I like all that major price action. You come off the double bottom, punch through the previous highs, didn't get too far. So a lot of times when it doesn't get too far, you're catching breakout traders, stopping them into the market, especially when it's come off such a low base, rather than market's pressed up and then chopped around near the just a touch below. That can a lot of times lead to an extended move up or a continuation. Whereas when they start a lot lower, but without pulling back, without having some sort of corrective action to drag in more buyers, they tend to wash it out, and they might have to deeper correction. Which this is done on a longer term time frame. It's a weekly. So what it's done is that secondary move down. Again, that's built a major higher low around 120, and then it's been working its way up since then. But this has been a nice slow grind. So overall, that weekly price action is quite nice. I think it all plays out nicely. This move could, if you just take it from low to high, my maths, okay, say it's around 80 cents up to somewhere around $1.90, so it's $1.10, add $1.10 to $1.20, $2.30, so it could still have another 30 or 40 cents, 30 or 40 cents to move up. I'm not saying that's where it's going to stop, but that's just 30, 40 cents left in this move up. Okay, you got to just sit there, sit back, assess it, go, well, what's the probability I'd sort of look at this trade? Would it work out? Or would you just trade it slightly differently? Let's see if this is the one. On the daily, for example, take a breakout through, say that high at 201, buy it at 202. Your stop's going to be just below, was it 194? You're not really risking bugger all, only was it 5 to 10 cents? You're not risking much. It's still a legitimate trade, because if this does go to 240 or thereabouts, that's easily, I don't even know, it's probably 5 to 1. So that's a legitimate trade, as in off the daily. It's just I'm always flicking back to the weekly just to see, is this going to be worthwhile longer term? Should I give it room to move? What's the overall sentiment of the market? At the moment, we're down. The market's moving down, but that's mainly because the banks they're all down today, so they're dragging it down. Doesn't mean there's not some good setups there. Let me just go back. Where was I? But so money 3 is, I think it's a fair. This trend is up off a higher low. We're holding an inside higher low. Everything looks great on that for a break up through 202. Buy that, but just know what your overall risk is. I wouldn't assume you'd want to be leaving your stop down at 170, because it's quite a bit to risk for a potential end of a leg move, if that's all making sense. Look at Bud, will do. So I only just saw this one today. I think that's quite nice. Main farmer. I actually don't mind at all. I mean, look at that. You've had this big press up through $2. Bad news, whatever. It's triggered this massive sell-off. So a lot of this, the buyers through here. If we can draw that up, we might see a clearer picture. And I think pharmaceuticals now are doing quite well at the moment. There you go. You've got support through, say that zone 50 to 60 up there. It's come back down to retest this support zone. It's starting to lift, and you can see that it's probably not so clear on the day, but we're getting leg up, maybe retest the highs, built a high low, and that's projected up to where we are now, taking out these, or just breaking out of that consolidation to the upside. So really, if you go back to the daily, from here, just let's mark up about $1.60. So potentially, there's a couple little, that's a minor level at 115. That's a minor resistance level it could come into. But I'd say that the major one's up towards 160. So that's 115 could easily blow through there if this is starting to really get on a bit and really starting to build up. But that daily starts to look good. You can see that's starting to curl up. Buyers are stepping in at higher levels constantly. Had a bit of a run up there. So this is early adopters really just jumping in there. Got it up quite high, up to about 80 cents. And then you can see the way that's come down quite hard as well. So that's just that early trade. And then these buyers, maybe the building position here, starting to buy it here. It's had that little run up. run into resistance, backed off, they brought it up a bit higher again and a bit higher until sooner or later that becomes a clearer picture. People at this stage are willing to put on the risk that there's some really serious support zone from here. Buyers here, here, and here are willing to support it, buying it off here. So if you got your risk just below that, there's a good chance that you're going to get another higher low. If you're risking, say, in around 75 cents, just before it broke through 80 cents, and then you can see that horde, I guess, of buyers. See what I'm saying? If we've got that, I think we might have to take a step back. We've got that higher low, which led to that acceleration up through 80, looking great. So by then, the outcome's becoming a bit more known. And then you're going to probably get some buyers who might be willing to step it up through that 90 cent, 92, buy it on there. They've got the risk just below 82 and a half, off a higher low. That first leg up, you might get that secondary leg up, and then you have to look back to the weekly just to find some sort of resistance zones that it could be working into. No, that makes sense. So that one's actually, I mean, it's probably not quite as nice because you've got a big move down here because we might just still have that longer term negativity in the market, but I'd suggest that that move down has cleaned out a lot of these buyers. If not, you're holding on. And this is the problem. You might get this little market pop up. You get anyone that's been holding it, stay through here, they might be coming back to break even, go, I'm sick of holding this, I've held it for years, out. And you might get that little push down and just see if those buyers can step back in again to support it. That's just another one I had on my list there. Just trying to think of what else. AMI, another miner, a bit smaller. That in a daily, as a daily, this is probably a good one, another good example. Daily looks nice. What I'd be looking for here is that high low. You can see that's had that little run up, 65, pull back, tried to go again, couldn't get much through 60, much past 60, had to have a deeper correction, but that rejection of this previous low at 53 cents is really nice. So from here, I'd be watching it just to see if it can pop up to say 57 again, pull back and build a higher low. Build a higher low in context of that move down towards 50, 51, then I think this one could be a little buy. And just continue. This daily trend is up. It's looking great. In the stochastics in a great zone too. And that would match off with that secondary move down. You got moved down in stochastics from overbought to oversold, popped up. Sellers can come back in, push it down, taking a bit of effort, but it's rejected that previous low. That's all, a positive sign. If we go back to the weekly it's just what we were saying before. By looking at this weekly, I might not want to put on risk onto this trade. So it's one of those things. The daily could be looking great, but the weekly you got to assess it. Go look, is it worth it? How strong is that setup on the daily? Is it worth it? I'm not just going to get caught on another pop up. And this is where I wouldn't buy. I'll draw it up. It's where just at the moment I'm not willing to buy when the market's. If you can see that, well, this was probably better on the daily, but anyway, got this move up here, this pullback, pop up, pull back. So at the moment we've got resistance. You can see across the highs there. I'm not willing to buy before it's broken here. So I wouldn't go, all right, got a higher low. I'm just say that's going to happen. I'm expecting that to happen and buying through that high before it's actually broken through that that resistance zone. I would ideally like to buy it when it's already on its way up. So this here, and it can happen time and time again, just say you're pushing up into a resistance zone there, it's pulled back, you've got your high low here, and you buy it. What if it just pops up? It just suckers you in, it pops up off a high low, and then it has a deeper correction like that. That's what I'm not willing. I want to see it come out of contraction. I'm always looking for a market to come out of contraction to show you early signs like in here with this little high up here. I'm always looking for that. I'd rather see it pop up out of contraction. For me, it's a good sign that buyers are willing to buy it up and then looking for that entry after that and just try to minimize risk on it rather than trying to guess before it's come out of contraction, because here, when it only pops up there, it could just be a bit of a sucker's rally and then roll over. Nothing to say it can't keep going with it, but I think that's lower probability than this setup, or much lower for me anyway, from what I've seen in the past. Does that make sense there, guys? Just what I'll be looking for, and this could happen on the weekly. This scenario could easily play out. It could pop up 57, even if it's off a high low. I'd be steering clear of it just for now, because it could have a deeper correction to say 47, and that would be a reversion to the mean just to clean out a few extra traders from the weekly charts, have a deeper correction. But if the daily's playing out okay, You know, if you take it across the highs then, it starts popping up to 60, pulls back, builds a higher low, and you can get an inside level to work off. Okay, it's worth it. And just see if they can extend a bit more and see how much further it can go. Because you know exactly from there where your risk is going to be. And you're not taking too much risk at these stages. It laid into a weekly trend anyway. I mean, God, you can get, it wouldn't take much just to go back through the ASX and pick a weekly chart that's been going up for a long time. And I might have said that halfway through the trend, exactly the same thing. It just keeps grinding high. So there's times I always like to go off the daily. Yep, okay. Am I at the end of a trend weekly? I'm not willing to let that keep me out of a trade, but what I'm willing to do is to use maybe tighter risk management on it because it could be the end of a weekly trend up. It doesn't mean it is. It could mean it could just keep going. Uh, another couple of bucks. I remember I missed out a few times on A2M. Look what that did, just above a buck. Anyway, the battle scars. Now, what do we got? NWL. Let's look at that. I can't spell. Now, this one here, I can see exactly what you're looking at, Lauren. And it hasn't got a lot of. I do like net wealth. It's just that green candle. I'd like to see a bit of contraction. Um, yeah, I mean, structure-wise, it's looking quite good. There's nothing, you don't really, was it Hub 23, 24? They're all doing quite good at the moment. Um, putting on more and more funds under management. So look, it could be one that's in just a hot area at the moment, which is doing well. There's nothing to say that this can't be building here. What we've seen is the market pop up, consolidate through here over the good 2010. Am I on a weekly chart? I'm on a daily. Just got to check out what date. 2018. Miles away. All right. So since pretty much the start of the year, it just consolidated through here, and then it's had a leg up. And what we've seen is that pull back, popped up through the highs, it took out the highs, and then it's come down. So I'm a bit iffy, slightly iffy, just on this one. It's popped up. If that was a strong market, and I don't like those green candles when you get a green candle come up and then it's rejected 2 days later. I'm not too confident on that. And maybe this here is what's playing out here. But well, I mean, it's going to take time to play out if that's the case. As opposed to a smaller green candle, and then you got just narrower ranges. You could have bought that at just a pop up through 9, pressed up, maybe get stopped out, take yourself out at some profit or a small gain, reassess it. Now that's this, as a minor entry here, whereas opposed to that, we've got bigger candles. So that just means that, the expansion higher has been a bit quicker, a bit more volatile, but then it's popped up through the high, you can see, and come back down and retrace, gapped up, boom, straight back down again. So this candle here, it's actually gapped up quite strong above 975, touched on 10 and basically closed on its lows for the day, which is not too good. The next day it followed with another move down, and that led to pretty much a testing of that anchor, eventually a breaking of that anchor. So this leg up, we're really in major contraction at the moment. Now see that what you're probably liking is that 2 moves down, it's popped up, it's off a higher low, yep, potentially buying it at 925, your risk is going to be low there. Look, technically nothing wrong with that. It's just these candles I get a bit stuck with. They're quite hard to the upside. Straight up, I would like to see something that's having a bit more contraction in it rather than something that's gone boom straight up. Rejected those lows straight away because it could just be a washout here. You might find that maybe that's the longer term trend popping up and it starts building its way back down, testing back down to 8. Who knows what it's going to do? But either way, technically, I mean, you could easily throw some risk at that. Maybe that's what we're looking at here. That's your contraction. That's your corrective price action, 1, 2 of this leg up. And we're on the rise again, which would mean that you take it from the lows, from down above, say, around $6. That's your high up towards 10. You got a $4 move, add that to 8, you go into about 12, thereabouts, roughly. That's where your potential projection into new highs could be. That would mean that's one leg up. We've corrected that leg, and we're on the secondary leg up. You bought it through 925. You're going to keep out of trouble. You should at 825, for instance. But maybe that's just a bit too much risk for me. That's why I'm finding that a bit tougher. But either way, that's technically it's looking okay. I hope that makes sense what we're just saying there, Lauren. Bud. Sorry if anyone's just drinking my coffee here. Now let's just look at Bud. Now there's Buddy platform. What do they do again? Potash Minerals, probably first data aggregation management and control platforms for the IoT connected devices. Okay, so this is basically a spiel of what they do. Software and services technology. All right, let's go back to the chart. What are we on here? That's our daily. All right. So God, look at that. It has a bit of a history of really kicking on hard and then spending a lot of time grinding back up. So the moves up are quite hard and fast. So it's whether or not we pull back enough. Um, so just trying to get a feel for each stock, and that's why it's important just to flick around on the charts too. I believe is that each chart has slight different intricacies, if I can say that, than each other stock. The way they trade, the way it moves, and you're just trying to read into it. Are we going to see a bit of a history repeating itself? What's going to happen? So we had the market from here has moved up quite hard, bang, bang, up, at secondary move up, and then spent a lot of time just washing out traders on this move all the way back down again. All right, and that took the good part from highs to lows over a year from this high to come back down to the lows here. And then we've moved up on that low, up off that low. So really it's, that retracement of that move up, that's about 60 to 70% retracement, which I never quite like to see. If it's a strong market, I don't like to see those massive retracements and then have another leg up and not take out the high by too much. What this did, it's got up quite well. It's probably essentially retested that high, pulled back, consolidate just below, which is actually quite nice. So if you're looking at it here, you're looking for that secondary leg up, which it did, popped up. So that's your second move up, the same as previously. Then we've come all the way back down again and pretty much about an 80, 90% retracement. Just get rid of that. Sorry, I think it's people just marketers selling. So yeah, that's quite a big retracement. So that's why I'm not too confident. You've got to sort of look at it. It looks like to me it's one of those stocks when it gets a run on, bang, it could be a good story rather than good results that are driving up. The really good story, they chuck out a couple of results, bang, it's off and racing, and it kicks on before everyone when it's up towards say this 40 mark or previously. They're going, hang on a second, they haven't done too much. Maybe we got ahead of ourselves, and then boom, all the way back down again. So fundamentally, this really is that sort of longer term trend, which is, if you're not buying around 8, it'd be a tough mark. I mean, if you bought it up here, you're probably buying it way overvalued. Does that make sense? Just what I'm trying to say. Rather than, they come out with some good results, they're building, they've done something good. So they've done something good, and fundamentally, it should be supported. You'd expect this sort of consolidation to happen higher, like to do this type of thing, and maybe take a few weeks to a couple of months to consolidate, but at a higher level. That's to me is where buyers are not willing to give up. They're not willing to get out. They're not willing to close it because fundamentally it's got a nice picture, which could mean that it's looking towards $1. So fundamentally, these buyers that bought it late are willing to hold it. Instead, what you're getting is buyers not willing to hold it, and it's coming all the way back down again before we're trying to potentially look for some more buying support. Sound like this, maybe we've come all the way back down to where we should be, but we might just be grinding sideways for the next 6 months. We don't know. If you go to the daily, just marking up the daily, marking. No, it is, Paul. It's bloody electricity. They call me all the time. I actually don't mind picking them up and just hanging up on them. You tell them time and time again, don't ring this number. And they say, sorry, sir, I won't ring you again. And then before long, because they know you pick it up, they'll ring you a day later. So I'll keep wasting their bills, wasting their money. So this year, you've seen this big move down. We've come all the way back down to 10 cents, popped up, retested down to 10, essentially. So that there is your anchor. That's around 16. All right. We popped up, but we're still below 16. So we haven't broken that anchor. So I wouldn't be willing to buy this at all until we break that anchor. I want to see it pop up. What we could be doing here is just chop and consolidate at a higher level. I'll draw that a bit straighter. Actually, I'll draw it here. So we're sort of looking for this, if we can consolidate, chop around here, but not go back down to 10 again, potentially it's looking a bit more positive. And the more time it can sort of, rather than consolidate a little bit, consolidate for a bit longer, that's more strength to me. And that's going to put more oomph into a move up, if that makes sense. But it's this little consolidation to pop up, you may not get quite as high, if that makes sense. So just these longer, the longer when it's basing or anything like that, the longer time spent basing or consolidating or anything generally leads to a better move up. Or maybe it's going to be a hard and fast move, but it's going to get some better results, a higher move. Like I said, more oomph into it. I just like that word. Does that make sense there, guys? But at the moment, we still haven't broken that anchor. And the one thing working against it for me is that, we're in that overbought mark and we couldn't break that anchor on this little pop up. I'd rather see it pop up, then maybe pull back and consolidate where it is. I'd rather see that. That means that buyers are a bit more energetic, a bit more enthusiastic about the stock because they pushed it up through the anchor and then potentially consolidating it. And then you get, move up through your anchor. You may have a 2 moves down and then start to build a higher low and off we go again. And that's where you get that, that a good strong move up. But instead, we're just below it. So I'd be cautious in buying this at a break because you might buy it through that, what's the high? So that high at 15, you buy it at 15 and a half or 16 and bang, it stops dead because it's right at the anchor. So yeah, it's worth keeping an eye on because it's definitely down. It's instead of coming back, it doesn't, maybe that down move's finished, but I don't think the start of a new move up has started just yet. So yeah, I mean, you might get in there and not take any heat, but you might sit there for 6 months while it's working its way, while it's building that base. You ideally are trying, anytime you're trying to get into a trade, you're trying to take the start of a leg up. You're not trying to muck around through this. You're trying to get in here. So, I mean, if you bought it here, yeah, ultimately you turned out it's been okay. But you spent, say, I mean, if this is a weekly chart, you could have spent a year doing nothing. This year, probably if you bought it, say, middle of August, you might have spent a couple of months until it's kicked off. Okay, that's nice. Yeah, great. I'm pretty good. I did all right. But you could have done something for 2 months, money elsewhere, made some money there, and it's sitting here, and then you buy it just on this breakup, and you might have got lucky because it's not lucky, but there's more information. You're buying it off higher lows, you're buying it off an inside level, you've got your risk lower, and then you got it right, and you bought it just before or just when when the market's starting to rise, and you're not mucking around, you're not wasting your time in the market, you're getting results straight away. So ideally, that's what you're always looking to do. Now, what I just come across to me when I said buy it, if you bought it in here, I would assume you're looking for an entry, because don't forget, if you did something like that, you just bought it reversion to the MAs, whoever your entries are, not off a higher low, not when you're seeing the price action. I'm always adamant, people try to buy off the right price action. So if you tried to do that in here, you bought it, say in here, you go, oh, it's going to go higher, or I'm going to get something like this, then boom, all the way down, you've given up. So there's times, even if people were positive up here, you've got to remember, you've got to buy it off a healthy setup when you've been proven right, rather than buying it just sitting on the bid, wait until it comes to you, you're buying it, go, okay, I bought it at a cheaper price. Don't forget, stocks can always get cheaper. I got sidetracked again there, didn't I? I hope that makes sense to you guys. Is there anything else you want to take a quick look at? I thought I'd just pop up the SPY, just intraday. Let's get rid of that. Intraday action. No, that's not it either. I've closed it. Geez, doing nothing today, is it? Pretty much pulled back, gone sideways. Actually, that's not too bad. If anyone's looking at this, that's why I think it's actually quite good. It's quite good looking at intraday. I know a lot of people probably don't do it. If you looked at, say, daily, you can get a bit more information from the intraday price action as well. Because what you're seeing daily is the start to finish, up, up, okay, sideways. That doesn't look like much, but you can, or that day, okay, that's rejection. What's happening? It doesn't look like much just on the day, but if you break it down and you're looking at the 30-minute candles, and I don't know how many 30-minute candles are going to make up that daily. Oh, what do we got? 4, 6 hours, 12 candles, potentially 12 to 13 candles are going to make up that one daily candle. So they can show you quite a bit more price action, because you can see on that day, say from top to bottom, sorry, bottom to top, when it moved up, you don't know if it's gone up straight away and come back and shot back up into the close, or it's gone up and down like a yo-yo, showing a bit of uncertainty. And the daily candle looks great, but it could be that the intraday action is showing a bit uncertainty. So you could take all that into an account to give you a better picture of the longer term charts or what's happening on the daily, what's happening on the weekly. So just going back to the daily, before I get sidetracked again. So what you can see, the market's pressed up, and then over a couple of days, it's just consolidated. It's actually moved lower. Then we had this little roll, tried to grind higher, and you can see that price action up, down, up, down, up, down, up, down, up, down, up, down, all the way. Then it started holding some lower highs. We get a bit of acceleration lower, come back down to the lows, and then reacted up quite strong. So this day here was quite a good day. But in context of what's happening, you probably look at the overall context on that day. You go, well, potentially just coming back up to and holding another lower high. And sure enough, the next day it's pressed back down. So you're just looking to see what sort of price action. And then, so from day, what do we got? So from this Tuesday, right across here, it's pretty much sideways price action. And then if you're looking at it here, it's pressed up, back up to the high. I'll draw it up. So this is, it's good for, I think, shorter term traders. The market's propped up, it looks like, and then you get about here, it's washing out these highs here and here, pressed down, could only get so far as back up sort of the top end of that range and then started pressing down. And you can see the move down was a bit more savage than previously. Rather than choppy, it had a bit more of a directional bias to it. Fell short of this previous low, popped up, retested that same level, come back down, only sort of retested that same level again. So what you've got is a double retest, and then it's starting to work its way up. I think that was the open of Friday. So I think the prior day. Either way. So this candle here, it's starting to hold. Maybe it's showing potentially in here, it's holding a higher low in comparison to this. So okay, you're gonna have that mindset of okay, coming into maybe this day, you go, it could be a bit of a more of a positive day. You know, set aside what the US is doing, but just looking at the intraday action to get some sort of bias. Don't forget we've had this leg up. What we're seeing here is consolidation of this leg up or a minor correction of that leg up. Price action is correcting, and we're trying to do the same thing as we look at the daily charts and the weekly charts. We're trying to buy it on the rise again. So what we've got here is we spent a lot of time chopping here. Any move downs is found has been met with some decent buying. The buying's popping up here, so we've got a double bottom here. Still can't get down, so buyers are stepping in at a higher level just in here, and then you got the next day opened up, not gapped up, but strong open. And then into the day, it pretty much, you can see it was holding higher lows. So if you're looking in the intraday price action on that day, you know, say the close was at Thursday, coming into Friday, and you're looking at that price action, you'd probably be fairly positive on it. So you might find that could lead you to getting into a position you may not have got into and getting some good results. Does that make sense what I'm trying to say, guys? And because you know that leg up, consolidation, if we're looking at this to hold and we're looking to some positive price action in the next couple of days, we're potentially looking for, you know, equal sort of a leg up. So you can mark all that up prior to your day. It doesn't mean it's going to happen in one day, but rather than get out here, you're looking at this price action intraday and thinking, look, I'll just hold it overnight. And then the next day, you've got this good steady move up. And then the following day, you've got a pop up, probably a pullback. Next day, retest of the highs. And maybe just in here, when you started breaking down, you could have closed out. So it gives you some nice meat to trade that move. But it's probably worthwhile just taking a bit of a look at this to get an idea of what you could be looking at over the next couple of days. I'm always looking at the SPY, always looking at the intraday action just to see, you know, what could be a bias. So saying all that, we've got one move up, secondary move up, consolidation through here, markets pull back, potentially build a higher low in here, but we're getting that bit of compression intraday. But take note of this, I mean, you've got good move up, okay, that was positive, one, potentially two, so potentially we're just grinding lower, and this could be enough to send us back up and through and take out those highs. Does that make sense, guys? So I'm just looking at the intraday action. Maybe over the next couple of days, a good strong move up through 6,300 is on the cards. I'm not saying it is or isn't, but this kind of price action is completely different to this price action. So when you've got all this price action, so that move down compared to this move down, they're two different things. That was quite hard. You know, you can see it's got up to the highs, bang, straight down. People gave up pretty quickly. They weren't willing to hold on to risk at all. Then you've got an equal, you know, quite a solid day. That was Thursday. Friday was contained. Today seems to be contained. It's edging. I know it's down 20 or so at the moment, But that price action is a bit different. So you can sort of look at that. That's grinding. So that to me is showing more strength than weakness. So I wouldn't expect it to grind down and then just go boom, fall straight through that low. I'd expect it to grind down, have another go at the highs. Potentially, we've done this. We're doing this type of price action, maybe grind down a bit and then start to pop up, build a high low, and then off we go. Something like this. All right. And it could be another good strong leg up, but we'll just see. Anyway, two to look at AAC and Vox. I hope that makes sense here, guys. I thought I'd just pop it up, chuck it in there, bring it up. Who looks at the intraday price action? Well, we all sort of end. I know I talk about flicking from daily to weekly, but sometimes it's just going down to a shorter time frame. It's all the same price action. You can read into it a similar type of movements, and then it might just help you with decision making, longer term or shorter term or whatever you're doing. If you own intraday, it's good just to know what the 30 minutes doing if you're trading off the SPY. What do we got? Pause. Double AC, not triple AC. That looks pretty good. Australian Agricultural Company. So the first glance at that daily, you can see markets moving down. Found a support around $1.10. And at this stage, it was still heading south until it popped up. You go pop up through the anchor at about, what do we got? High 127. This move up through the anchor. Then this move down was really nice. Like it did push down, but then it kept getting supported around $1.20 as opposed to a deeper correction. So it's another 10 cents lower. Oh, it was about a 50% retracement of that move up from, what is it, $1.10 to $1.30. 50%, buyers were holding it up, that 50% move. So sooner or later, you're going to expect the buyers are holding up, the sellers to give up the ghost and just ease off on the accelerator, trying to push it down. And then the market's popped up and it's going on from $1.20 to about $1.40. So that move up's matching around about where we are, $1.40, matching that secondary move up. So either way, that daily doesn't look too bad. We're getting a bit extended up here, so I would ideally look at something similar here, a bit of a pullback, consolidation, or just to reset itself and start to look to build a higher low and then try to take advantage of that higher low when it's moving up and out. I think you answered my question before, Paul, a little. Probably doesn't make sense, but so this here, yeah, if we flick it back to the weekly to get an idea, in the context of the weekly, maybe this move up here is going to be equal. Let's just draw that up. So maybe buying it, if you're buying up around 140, just looking at that, that's not what I wanted to do, was it? That's right. Okay, that's wrong. All right. So we've had the market chop around here, the base through, well, roughly through there before we had this move up. What we can see is that I would take that as one leg because I know that's you've got that type of move. And then, yeah, we did have this pop up. This is a major lower high. So that's one, two, potentially two, and it's really taken out these all previous lows. So this, to me, is not very strong. I'd probably be thinking twice. Just off the weekly, we're into overbought territory up here. Don't forget, we've had this type of move up can just be because it can't get through at this stage. They can't break into new lows through $1.05 at that stage. So it's going to back and fill a bit and back and fill. It's still in context of this move down. You'd say the anchor is way up about $1.60, so it can easily back up. And then what it's doing is, it's like I always say about the long jump, you've got to take a bit of a longer run up to break something or to jump. This is really just backing up a bit to take a longer run up potentially to go and break through $1.05. Now, if you do this and then come down and retest and fall short of $1.05 or retest it and then start to lift again, I'll be more inclined to buy that, to buy it off a higher low. So what we can see, markets move down. I'm just starting for about here. Popped up, pressed down. We sort of got this move here. We're at about this stage now. Now, if we do press down and retest, then maybe it's worth looking up off a higher low because that's, it's retested that zone a couple of times. It's failed again. It's failed to push through there, and it's even taken this run up, a deeper correction to try to get through, and it couldn't. That means buys. It's just more strength on the buying side. It's showing that buyers are willing to protect $1.05. They're willing to step in at $1.05. They're willing to give it a go. It's not going to get through there. It's going to take a lot more effort to get through there anyway. So that there would probably be a better entry than buying it. I would personally probably be waiting. I mean, this could just lift up and keep going up, so be it. Doesn't really bother me too much if I miss that out, but I just think it's got, for me, it's the probability of just continuing higher, or take a step back from there, the probability of this type of action doing and just going up another leg, I think it's getting a bit low and maybe pushing up to $1.60. It could be. I mean, if you're going to put risk at that, just wait till it breaks out, wait till it continues higher. You know where your high low is. Are you throwing risk at it? And then you're going to be looking to see if it can push up to $1.60. If it can't, you probably want to bail pretty quickly because this could easily just turn around and roll over right back down here, or take out a few of these high lows on a move down like this, and then start to build on a more major high low, if that makes sense, over the longer term. And then if you get that type of price action, it pops up and then rolls over, builds a high low on a weekly basis, then yeah, could be worth jumping into. Hope that makes sense on that one. What have we got? Vox. Didn't get me anywhere, did it? Is that VOX? Or is it VOC? Gene, what you're looking at VOX or are you looking at VOC? Vocus? Good work, Mary. Just let me know. Otherwise, I'll look at VOC. Could be the one you mean. Well, X is next to C, isn't it, on the quirky board? Yeah, this one there, I think it could take a long time. As an example, I was into wrap, and that pop down there, we all thought, okay, that's going to gap fill, pop up, we'll give it a go. And instead, it's just taken a long name. Not Vox. VCX. Gotcha. Let's go here. Come on, ready? VCX. Vicinity. Right, we figured it out. A couple of geniuses. What I'm seeing on this one, we haven't spent. Okay, the weeklies. We'll just start with the weekly. I don't know what the daily's doing. So we've had, a zone through here. And I think that's going right back to the start, isn't it? Well, it was more than that. Yeah, so that's the zone through there. So it's had this zone, it's pressed up, pulled back, had another leg up. So that's your two major legs up. That's essentially my top because this little pop-up's a washout. I'm looking at that as potentially going to be a resistance zone down the track. Then you've had a massive sell-off down here. Don't like that, and it couldn't get very high. So that retracement is only about, say, 30 or 40% of this move down. Then you found selling pressure again. It just continued moving down, continued. So that the selling pressure is still consistent. Now we've got the most recent lower high is up towards 290. So this moving up, potentially it could be coming into a zone to build another lower high and press back down to 225, even go lower and press right down through, $2. We don't know that yet. From what we're seeing on this picture on the weekly, we don't know. At the moment, sellers are in control on the longer term. I know we've come up here. So if you're looking at just a daily and you only saw data, say, from on that rise, it could look really positive. But in context of what's happened on the weekly, it could be running out of steam around 275. And you jump in long, all of a sudden you get stopped out. So the weekly's not telling me that I'd like to place risk into that trade at the moment. I would ideally like to see it pull back, build a high low, maybe 250 or thereabouts, And then, when let me just draw that again. We've had, just say that's that move up here. We've moved down, we've popped up. I'll draw that better. Here we go. Can everyone see? I probably can't see that. Move that across. So we've had this move down, which is the latest move, pop up. I'd rather see it pull back and then start to consolidate around here. You've got a couple of lows to work off. You can put your support lines in there. And then I'll be drilling down to the daily to think this zone here, where it's at the moment, is potentially a good spot on the weekly chart. That's going to be a higher low from the weekly. And then I'm looking down to the day to see if it can push up through that high and extend. And that way your risk reward is going to be 2, 3 to 1, 4 to 1. It's worth having a crack at. But I think up here, it's not really worth having a crack at, if that makes sense, where it is, because this could easily roll over from here and just keep heading south. I'd rather see it pop up. I want to see evidence that buyers are willing to support it at a higher level than, say, 235 or 240. Support it at higher zone, maybe chop around, and then just drop it to your daily. Now, looking at the daily, so even up here, you had this leg up, oversold to overbought, up here, pull back, not enough pullback, good extension back up again, back up to around 270, overbought again, come the way back down to oversold. You go, okay, that was a good little move back. So as a buyer, you probably thought this was going to happen again. You bought it, run out of steam, pretty much popped up to here, back to overbought, couldn't get through that high. So it's really a double top. So that double top would lead you to believe a deeper correction. So for me, this is going to be, I'm looking at this as a lower high on the daily, and a push through these lows at 258 potentially. And just to correct this leg up, and then I think we could roll over, and then all from there you'd be looking to see if it could fall short, find support at, say, around that 250 zone, which is this low, 246.5, find support around here, and then start to build that high low on the weekly chart. But we'll see. All right, I might have to call it a day there, guys. I hope that made sense, just what we've been banging on about today. I hope you enjoyed it. Now, if there's any questions, yeah, just send us an email to support@tradesetup.com.au. Or anything, even if you want to disagree, send it through. I don't care. We'll have a chat. We'll have a chat. We'll have a conversation. Anyway, yeah, like I said, send the email through, support@tradesetup.com.au. Anything else? Otherwise, we'll see you all on Thursday. Thursday, same time at 12:30. Thanks, guys. Have a great couple of days. See you then. Cheers. Bye.